we do have some interesting stuff I want to talk about with the NFP stuff that came out last week, especially with CPI coming in on Wednesday and Thursday. We have PPI as well. I think we have PPI on Wednesday, CPI Thursday. But did anything stick out to you on this commitment of traders data report this current week?
On COT or NFP?
COT.
Okay. Yeah, it doesn't look, it still looks dollar bullish overall. They're selling indices and metals. S&P got a positive score just because they took away more shorts than they did longs. So, still overall a net bullish positioning, but it's hardly anything. It's less than 1%. So still not a lot of change there, although that is from last COT, which is Tuesday of last week. So what we did clearly see though was some strength in the markets going in towards the end of the week. There's just based on volume, you could see that there was a lot of buying, and I think it would be probable that a lot of that buying was probably smart money. Even so, NFP suggested that where jobs market is way too high. It's still on a longer term scale coming down. Like I remember we talked about this last week, but the overall number of jobs added month to month is decreasing, and then you get these occasional spikes, and then also we have to look for revised numbers that could also be an influence later on. So maybe that the number they see isn't as high as they actually got. So just look at that, and then going into this. Oh, sorry, go ahead.
Let me just finish out on this for 1 second, Frank, because I totally agree with you. I want to talk about that at length in just a moment. In terms of the COT data, someone said that they were a little bit confused by this application. So let me just run through this really quick. So Frank mentioned to us, he pointed out for us that we had some bullishness in certain areas like the US dollar. So the simplest way to read this report that you see on the screen, the way we've built this, is you can always look at the far right column. The far right column will show you on a week by week basis what changed on the commitment of traders data. So if you're looking at USD and if you're using the EDGEFINDER, just click on USD. It will highlight the row for you, and you can see that on the net change basis, we had a really big overall bullish increase. And then if you take a look at some other things, and you can look at pretty much whatever you'd like, we have tons of stuff here. You can take a look at gold. We saw gold also see a really big bearish bias as well, minus 3.82%. So in terms of stuff that stuck out to us, Frank mentioned the US dollar, clearly a very interesting one. S&P kind of flat, NASDAQ, but then what was kind of concerning on the indices side is you have this US 30 minus 4.11%. In terms of NFP last week, what might have been confusing to a lot of people is jobs were really strong. And as we've said over and over on this show, strong jobs is going to weaken, stocks and strengthen the dollar, because the Fed is going to probably have to keep rates higher for longer. And while that is true, the other side to NFP that was very, very interesting is that despite adding a lot of jobs, which shows strong companies in the US, we also got a slowing in wage growth, which, remember, the reason we're fearful about hot jobs numbers is because inflationary problems. But if wage growth was mild, that kind of gives you a little bit of optimism in the soft landing side of things, where it's companies are strong, they're still hiring, but wage growth is slowing down, which is not so bad for inflation. What do you think, Frank? That's the best explanation I could think of right now.
Yeah, no, I agree with that, because what we're expecting now is...
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Lower levels of inflation this Wednesday and Thursday.
Yes.
So although wage growth is declining, we can also look towards what we're hoping for and what economists think are going to happen. So seeing lower numbers overall is a good sign going into it, at least. But what we need to also pay attention to is that the Fed also mentioned they wanted growth in the jobs market. They're seeking higher employment over time. So it's not necessarily a bad thing, I guess, to see higher NFP numbers than expected. And I guess we even saw yesterday that the initial reaction was the scariest part. It dipped pretty heavily, but only to recover and then some. So we saw a huge green candle on the indices. The dollar declined, and non-farm employment change beat expectations by double or more. So I think what we're at is a good position right now, seeing lower wages, and what we need to see is this lower CPI and PPI. Both cores are expected to remain unchanged, but if we see lower year over year on CPI and then month over month on both, then I think we'll be in a good spot to start looking at the indices again.
I guess one positive thing for CPI is oil came down real hard this past month, which, CPI, the headline variation, does include energy, which cooling energy prices can act to help on the inflationary front. And at the same time, suspended energy prices can also bleed into core CPI as well. So, but we've kind of seen oil doing some crazy stuff. What do you think about oil, Ivan? Do you think oil bottoms out here with this whole Israel conflict with the Hamas? Do you think that potentially starts a new trend to the upside again for oil?
Okay, let me educate you a bit. Okay, I'm ready.
Okay, educate me.
Okay,
ready.
Okay, so what happened was, it's a one-off event. Unless we have now worse and worse news, what happened in Russia or Ukraine, this is going to go higher. But with that information only, this is going to go lower, because it has to be an escalation. That's the only one that's going to keep the fuel firing. The only reason why now it's falling is because of Saudi Arabia. So if Saudi Arabia comes out and says they're going to cut production again, that's going to make it go higher again. So no, I don't think so. I think this is going to drop further, maybe down to 80 before it finds the bottom, because I don't see what else can escalate the situation in Israel, in Hamas situation, other than if Saudi Arabia, Iran, or other countries around joins militarily for Palestine. Then you have a war in Middle East, and that is going to send this one to 100 above.
Yeah, that's probably a fair point. I think that, as you said, one-off situation. If it cools from here, oil very likely will persist back down to the lows. But I think there might be a little bit of a price premium on oil right now because of that possibility of. I know there are other groups that are threatening to jump in on the action, which again could be not what anybody wants. Nobody wants war, right? But from an oil price perspective, oil trading up here is also kind of a question mark. If that looks like it's going to develop further, as you mentioned, I think it's very fair to say oil could run really strong for a while. And again, kind of just one of those wait and see events. None of us know the future of that situation. And just food for thought. Again, oil traders out there, if you're somebody who's watching oil, keep an eye close on what is happening there. Also, while we're on the subject, another thing that popped off of that is gold. And I want to ask Frank, gold made a move off the lows here with the whole invasion stuff going on. Do you think, same question except for gold variation, do you think gold has any room to push higher here, or are you still looking for bearish setups?
It's tough because the market and gold are moving in tandem almost. And I'm still long S&P from October 6th, which was, I can't remember what day of the week that was, but it was before NFP. And so yeah, we had that scary moment where price just started falling down and then recovered. So I think what I'm gonna do is potentially wait for a break in structure on gold, because here we still have this huge resistance level. We have a falling trend line. It had its death cross, so it's marking a long-term downtrend. I guess you could, there's some money to be made if you want to get a pullback from here, but all I see is a further setup for another short. So I'm steering away from gold, but I like being long the indices just because of there's other factors that impact it other than gold's couple indicators. Like even the 2-year yield is very impactful for this. Like even down to the hour, if you see it rising up in like 15 minutes, gold comes down the same way. So not very bullish on gold right now, but I might look for short setups in the future, maybe around the 1880s again. But yeah, I'm mostly, so I'm looking at the indices, and then I want to get short US dollar CAD. And I've been in a couple trades that didn't work out. They just either stopped out or hit me at a break even, and then all of a sudden price is just coming down again. We're seeing oil strength. They're buying CAD and smart money. So I think it's the shift in what we've seen, the dollar strength, gold weakness, S&P weakness might be starting to turn around. But that's purely just speculation. So just watching.
Yeah, and I think Ivan, go ahead. What do you got for us?
Why not CAD yen then?
CAD
Why
yen?
not what? Oh, CAD yen?
Yeah.
I haven't really looked at CAD yen. What about CAD yen?
But you say they're buying CAD.
Yes.
And I don't know if they do sell the yen though, but wouldn't that be a perfect storm rather than against the dollar?
The thing about yen is that it's been so incredibly weak, and I know that retail traders are always trying to catch that reversal, but there's always talks of the yield curve control. So they're in and out of this sort of, oh, when are we going to step in? Like, are we gonna do it now, or are we gonna wait? And those expectations really steer the market for yen. And I guess what you could get in as what you think is a good setup could just go drastically against you. I guess I need more confirmation, and I need to look more at the CAD yen chart before I make a decision. But yen is weak, but for how much longer, and will it stay at these lows? Because I'm pretty sure they've been buying yen as well, as they were buying dollars. So there's more strength on that side. It's just hard to tell. I don't know. What do you think? Are you trying to long that?
Yeah, I'm longing it. But what I was supposed to say, like the water is not that cold in that Atlantic Ocean, even though everyone tells you it is cold. It's just perspective.
Yeah, CAD yen's interesting. I think any yen cross, you carry the extra risk and reward of the intervention stuff. But I generally like CAD yen long. I like pretty much shorting yen right now, but you have to be really careful because again, those intervention threats in the past have dropped yen crosses by 500 pips in a day, and none of us know exactly when those announcements or statements are going to be made. So there's a little bit of a risk to reward extra. But Ivan, it looks like you've got a nice trade here so far on CAD yen. That's awesome.
Yeah, I know. I know the risk. That's what I was talking about. But I understand that. But do you think they're going to intervene again now at 148.78? Wouldn't they then let that one go up again like they did last time? The thing is that it is rational fear, right? But isn't that what we have stop losses for?
Yep, that's true.
Very
that's
true.
Isn't that a risk
I
we're supposed
hate
to
it.
take into a risk premium? I'm not saying yen is the best thing, but I'm just saying that should be the one that kicks you out fine. But then that's just a risk that we take or not take, because there's other pairs, for example, SMB in the Swiss would also be the one that can all of a sudden intervene. It's not only yen, but I just wanted to challenge you on that one.
Well, and to your point, the BOJ, like they talk about it all the time, and then they just switch gears all of a sudden. They talk about intervening, and then they say, "Never mind." So that's what makes it tough. But like clearly, your trade is working out great. So I mean, being long right now and being in profit, like I would be happy to be in your position. But for me, like getting long now, I guess, would just be tricky.
Yep, that's fair. Well, guys, I want to keep going, but I also want to make sure that we talk about something else. Of course, the US dollar in relation to all this stuff. The dollar index is still up, right? It's still trading very well to the upside. And, you know, there's a little bit of fear around the Israel situation. And we've talked about it a couple of times on the podcast. We talked or on the show here in terms of oil, right? Oil up. We've also seen gold had a little bit of a bid there. But I want to talk about the dollar for a second and what some of the implications of war in that situation is. On one hand, you get dollar risk off due to concerns around that. And then you also get concerns that, you know, war can be, sounds a little bit like QE, right? We've sent a lot of money over to Ukraine. And if there's a similar situation going on in Israel, where there's, of course, war, money printers have to turn on for those sort of events if the US is to intervene so much. So it's an interesting kind of story there on the dollar front. Ivan, what do you think? Let's just say, for example, that conflict escalates further. Is that dollar bullish or dollar bearish in your opinion?
Dollar bullish.
Okay. Walk us through
That's a clear risk off move. So the move then is, if there's escalation, then you have to add a country to it. Whatever country that is, Iran, or the producer, Saudi Arabia, oil producer, Egypt. I don't think they're going to do it. Lebanon is probably not the greatest country to be like going into risk of, but where would you then be investing your money if there's a war in Middle East somewhere else than Middle East? So America, in Japan, far away geographically, but also where is the safest, where is the most robust country right now? Japan or America. The other thing is that it is a proxy war for US. They are supplying Israel with a lot of military. Also they did that with Saudi Arabia. So America is kind of like, I don't know, maybe Japan is better than. and also would definitely go into gold. And the reason for that is people would then be afraid at losing investment, whatever they are, and then run to those who has the largest, biggest, and safest economies.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.